All right, welcome to the Explainer. Today we are digging into a truly fascinating daily brief. Right now, literally as we speak, there are massive tectonic shifts happening in the global financial architecture. And on the surface, honestly, they look completely disconnected. But if we dig just a little bit deeper, a pretty stunning picture starts to emerge. So today, we're going to put on our investigator hats and examine three massive global market movements happening right now that are leaving a lot of casual observers totally scratching their heads. Okay, let's dive into this and see what the data is actually trying to tell us.
Because this is really the multi-trillion-dollar question, isn't it? What connects record-breaking inflows into global equities, sudden dramatic fractures in Middle Eastern energy alliances, and China's massive, seemingly illogical accumulation of oil? Individually, sure, each of these events is a huge headline grabber, but when you put the pieces together, you start to see exactly what is driving the absolute smartest money in the room right now.
So here is our roadmap for today's brief. 1. Record equity fund inflows. 2. The OPEC oil shift. 3. China's strategic energy hoard. And finally, 4. The geopolitical AI connection.
Okay, let's jump right into Section 1, record equity fund inflows, and this unprecedented institutional buying we're seeing in global equities.
So, global equity funds are basically pulverizing historical records right now, seeing buying levels we honestly haven't seen since the euphoric highs of 2021. And here's the real kicker. Tech was actually the bargain of the decade. I know, you hear a lot of people saying tech is in an overvalued bubble right now. But get this, at its recent lows, a massive tech giant like NVIDIA was trading at a price-to-earnings, or PE ratio, of around 24. Compare that to traditional retail giants. Companies like Costco or Walmart have been trading at multiples of over 40 times earnings. Crazy, right? So from an institutional standpoint, they were aggressively buying up technology because, relatively speaking, it was surprisingly cheap.
But you know, it's not just about snapping up a temporary discount. It's about what that technology actually represents. We are standing at the very beginning of arguably the greatest technological revolution in human history, artificial intelligence. The Magnificent Seven, the largest tech companies on the planet, are projected to invest roughly $0.6 trillion into AI infrastructure this year alone. That's $600 billion of pure capital expenditure. Institutions know that if you aren't heavily invested in the tech sector right now, you're effectively sitting out of the market altogether.
And if we look at the projected timeline, aside from just standard corporate earnings growth, what are these mega fund managers really anticipating? Well, they're positioning themselves for what you could basically call the mother of all liquidity injections. Sure, we might see short-term pullbacks or little corrective phases along the way, but the general expectation among these massive global institutions is that the underlying bullish trend is going to continue incredibly strongly through 2026. Why? Because by 2027 and 2028, they are anticipating a massive influx of global liquidity to hit the markets. They are simply getting their buckets ready before the floodgates officially open.
All right, moving on to Section 2, the OPEC oil shift and the fracturing of Middle Eastern oil quotas.
So let's shift gears from the data centers of Silicon Valley to the geopolitical sands of the Middle East. Because the established order of global oil production is actively fracturing right in front of us. You have the United Arab Emirates making the historic decision to exit OPEC on May 1st. Meanwhile, Kuwait is actively clashing with Saudi Arabia. You see, OPEC completely relies on strict production quotas to keep global oil prices stable. Kuwait's limit, it was around 3 million barrels a day, but they've completely ignored that. They are aggressively investing to boost their extraction capacity up to 5 million barrels a day. Why this sudden, massive urgency to pump as much oil as humanly possible? Because behind the scenes, Kuwait and several other Gulf nations are facing a really severe shortage of US dollar liquidity. They are actively seeking currency swaps from the US government just to get their hands on dollars, and they're even selling off their gold reserves to generate cash.
So the crucial takeaway is how this all plays out in the real world. Let's walk through this projected domino effect. Once geopolitical tensions ease up and traffic through the Strait of Hormuz normalizes, these Gulf nations are going to unleash all that massive pent-up capacity. They're going to sell that excess oil, again up to 5 million barrels a day for Kuwait alone, like there's literally no tomorrow. Now, when that much supply floods the market, step 3 kicks in. Global oil prices should drop, and drop significantly. And step 4, they'll take that huge influx of new cash and use it to buy back the gold they've been forced to sell recently, replenishing their sovereign state reserves.
Which brings us nicely to Section 3, China's strategic energy hoard, and why they are buying oil at top dollar prices.
This massive shift in global oil dynamics leads us straight to Beijing and to a really glaring paradox. Why on earth buy expensive oil?
Right now, it makes zero traditional economic sense to aggressively stockpile a commodity when it's trading at top dollar prices. I mean, you might think, well, maybe they expect the price to skyrocket even further, but actually no. The general consensus is that they aren't engaged in simple price speculation here. There's a much deeper, much more strategic motive at play.
The reality behind this epic buying spree isn't about day trading. This is a strict, non-negotiable government red line. China is buying up expensive energy to guarantee absolute, ironclad energy independence. And they need this independence for two very specific reasons. First, the sheer amount of power required to fuel their own AI infrastructure and technological defense systems is just astronomical. AI is incredibly energy intensive. Second, they are proactively insulating themselves against future geopolitical shocks. They are specifically preparing for contingencies surrounding Taiwan. They know perfectly well that in a severe geopolitical crisis, energy supply chains will be the very first things choked off. So they're basically paying a massive premium today for security tomorrow.
All right, let's wrap this all up in Section 4, the geopolitical AI connection, where we'll synthesize today's market anomalies.
When we finally tie all these threads together, the overarching truth connecting our three mysteries becomes crystal clear. AI development and geopolitical independence are the hidden forces driving today's global market decisions. It's all one giant interconnected web. Institutional investors are pouring hundreds of billions into tech because they see the AI revolution and that incoming wave of liquidity. The Middle East is fracturing its historic oil alliances because nations are desperate for dollar liquidity to navigate a rapidly shifting geopolitical map. And China is hoarding expensive energy because they know, without a doubt, that whoever controls the power supply controls the future of AI and national defense.
Which leaves us with this final, vital question for you to consider today. We've just seen how the absolute smartest money and the largest global powers are positioning themselves right now. They aren't looking at today, or even next month. They are looking closely at 2026, 2027, and the massive technological and economic shifts on the horizon. The entire global board is being reset by artificial intelligence and the race for energy. So take a hard look at your own strategies, your own understanding of the market. Are you prepared for the hidden forces that are shaping our future? Thank you so much for joining me today on this daily brief. I really hope this helped piece together the puzzle for you. Until next time, keep analyzing and stay curious.